Hi traders, here's a new video. First of all, the risk warning. Your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another Fibonacci trading strategy video where I'm gonna show you those kind of concepts, Fibonacci concepts, which I have explained in my ebook. The link to this ebook you can find in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame and any kind of financial instrument. So get this ebook. And in the description, you will find not only the ebook, also the link to the Facebook group. So join it too. So let me see what's going up. So we have here swing low, swing high. Here we have this area here. Yes, this looks like we are going to break out. I will take this better. Yes, it's a higher, bigger, greater swing. So I will switch it around. Yes, I will switch it around. So, and then we are going to trade here. So, in no man's land. Here we are in no man's land. And okay, so I have to apply it again in this kind because I didn't know if price would go up. So let me see. Yes, yes, okay, here we have, okay, I will do a put from this level, yes, from the 23.6 Fibonacci level, because I'm sure that price will pointing down, yes, price will go down, and yes, we got a fake breakout of the 23.6 Fibonacci level, and that is what I saw here, yes. So let's see what's happening, if price will go down, but I'm sure that price will go down, but market is doing some kind of panic, but we have here almost some ranging market, so I'm expecting a bigger candle, yes, it doesn't stop there, that is my opinion, but we will see what market is going to do, yes, it tries to retrace back, but at the end, the ranging power of the ranging market is stronger. So let's see. Yes, it was in the money really close. Yes, I will do another put because that looks like a reversal. And I'm sure that price will not break through the 23.6 Fibonacci level, and that's the reason why I entered immediately after this hanging man at 23.6 Fibonacci level again into a put, yes, because I understood that price will reverse from this level. Yes, also if it's stopped before, it was only because there should be some kind of support and resistance. So now we got here a rejection, but this was not because of the 23.8, a 38.2 Fibonacci level. This was because of the 20 EMA. So, and I will now understand, yes, you see, now it's going to break through it, and it looks like we are getting here into a reversal. But the next candle could be a retracement. So wait, I will enter into a put on the next candle. Yes, I will do another put now. Oh no, late entry, but I'm sure that price will pushing down further against the 20 EMA because the previous candle already tried it. Yes, we have a long wick. We are here in between of the 23.6 Fibonacci level and the 38.2, which is nothing else than no man's land, because if I'm gonna turn it around, look at this, you will understand what I mean. Those concepts which I have explained in the ebook, you see, that is the 61.8, and here we were in no man's land, and that was the reason why I entered here into a put, because I understood based on the price action here on the left that this area will be broken, yes, because we got already through this before, yes, this candle here crossed this level already, so it penetrated this area again, yes, and that was the reason why I was pretty much sure that price will continue going down. This is now a double top forming, yes, and so I would expect that on the next price will go down further because of this double top. In between there could be always some kind of retracement. So okay, that was already. If you like this video, do a like. If you didn't subscribe to my channel. If you have something to say, drop me a line in the comment section, and so I would say stay safe and bye bye.